Good afternoon, everyone. I, Ashish Karodia, CS Ashish Karodia, Council Member of ICSI, extend a warm welcome to all the participants and our esteemed speakers, K. Sarvanan sir, CGM Sebi, and CS Kuntal Mandavleji, in this seventh webinar of Master Knowledge Series Triple E 6 on topic corporate bonds, regulatory framework, and compliance. Friends, India's ambition to become a higher income country by 2047, Viksit Bharat, requires a financial system that can mobilize long-term and low-cost capital efficiently to sustain high investment in inclusive growth. In this context, deep and vibrant corporate bond market is essential to complement the banking system, reduce systematic focus risk, and provide a stable source of long-term financing for infrastructure, industry, climate actions, and emerging sectors. A well-developed corporate bond market can play a key role in achieving a balanced, robust financial architecture by expanding funding avenues, lowering borrowing costs, and strengthening the transmission of monetary policy. India's policy and regulatory authorities have already made significant steps in this direction. CB has introduced electronic trading through the request for quote RFO platform, facilitated retail access through online bond platform, supported governance standard for credit rating agencies and debenture trustee, and simplified issuance norms. Friends, the RBI has enhanced the settlement architecture with architecture introduced tri-party repos and credit default swaps, and supported the development of repos and clearing mechanism. Additionally, the government has promoted infrastructure investment trust, in which the real estate investment trusts and a green finance initiative to encourage long-term investment and extend capital markets. Collectively, these reforms have laid a strong foundation for a more transparent, accessible, and technology-driven bond market ecosystem. For company secretaries, understanding the legal, regulatory, and governance dimensions of corporate bonds has become gradually important, as they play a vital role in ensuring compliance, facilitating issuances, managing stakeholder expectations, and upholding market integrity. As trusted governance professional and strategic advisors to bonds, advisors to boards, the company secretaries are exceptionally placed to contribute to the strengthening of India's bond market by ensuring transparency, investor confidence, and regulatory excellence. These webinars seeks to empower participants with actionable knowledge, uh, enabling them to support corporates in leveraging bond markets efficiently while maintaining the highest standards of governance and compliances. For having regulators prospect, we are honored to have with CSK Sarvanananji. He is working as CGM at SEBI since 1998 and currently in Department of Debt and Hybrid Securities. He is also an associate member of the Institute of Company Secretaries of India. He has around years of work experience serving as a regulator. We welcome you, sir. For putting forward the professional's view, we have with us Dr. C.S. Kuntal Mandavle. He is a distinguished finance governance and public policy professional with over 20 years of comprehensive experience, including 17 plus years post qualification as a fellow company secretary, currently serving at Pune Municipal Corporation. He supervises municipal finance operations. Academically, members the Chartered Institute for Securities and Investment, CISI London, certified SAP FI CEO, SEPFICO, a professional and fellow company secretary, FCSI, and fellow company secretary, FCS, ICSI. Doctorate in Public Administration and Finance Management, MBA Finance, MCOM, BCom, Pune University. He has been awarded with excellent Performer Compliance 2020 BSc. Sir, we welcome both of you in this seventh Triple E webinar and privileged to have you as a speakers. I am confident that the deliberations today will not only enhance our understanding but also equip us with the actionable insights to contribute effectively to the deeper understanding of the topic. I encourage all the participants to actively engage in the sessions, share your queries, and make the most of this knowledge sharing platform. With this word, I once again welcome you all and look forward to an insightful and enriching session. With great pleasure, I now invite CS Sarvanan sir uh, to share his valuable insight with us. Sir, we look forward to your address. Please, sir. Thank you.
Good afternoon, everybody. Thank you, Mr. Ashish, for the kind introduction. Good afternoon to Dr. Kunal, co-speaker over here. Thanks to all the ICAC members. It's always been a pleasure for me, being a member of the Institute, to come and interact with co-members of the Institute. And a couple of months back, I had an opportunity to interact with members at NSC Exchange Plaza here near my office. And that was a session on REITs and InvITs. So today's session is on corporate bond. Again, another important subject for me, an interesting subject, being a company secretary. So all these subjects are of interest to me personally as a person, as a professional. And being SEBI being the employer, there is also occupational need for me to be clear about all these thoughts. So this is a great opportunity for me. And at this juncture, I must thank Mr. Narasimhan, past president of ICSA, who was insisting upon me to come for a session over here. And I must also thank Madam Lakshmi, and who was there with me yesterday. And thanks once again for all the invitation from the ICSA fraternity. So bonds, all of us know what corporate bonds are. And before we get into bonds, I just have a 4-minute video to be played for you all that takes you through the genesis of the term bond, how the bonds have emerged, okay, where do we stand today, and stuff like that. And just play that video. Yes, sir. Share करना होगा ना? you so much. So before we start my presentation, I would like to introduce two of my colleagues who are there with me. One is GM Mrs. Sarika Kataria, and the other one is Devi. She is one of my officers over here. They have been assisting me in my department. Right. Presentation. Next. This is more of a theoretical definition. What a bond is. Bond is a fixed income investment product, and it gets you a specified interest rate. And the tenure is usually fixed, unlike an equity. There are a lot of differences between bond and equity. Here, there is a specific interest rate, which is a kind of a contractual obligation, whereas an equity dividend may be paid, may not be paid. That's discretion of the board. Here, somebody has to necessarily, pay the interest if that's what the agreement is all about. Of course, there are ZC, ZBs kind of bonds are also there, but this is the one which we normally, talk of in terms of bond, and it's for a predetermined period. So what happens when the entities who raise the bonds, when they repay, they repay them with the principal amount, and they also pay out the periodic interest payments. And who are the people who raise bonds? Which companies, municipalities? We have one representative from Pune municipality. State government, central government, sovereign government. Okay, so this is for various purposes for all the projects and operations. So this is how the bond theoretical definition, somewhere roughly looks like. Yeah, next. When you talk of bond, so I am reminded of my student company secretary days when I used to read what the debentures are, and as per the companies at 1956 I'm talking about, almost the same definitions contained in 2013 and also in section 2, subsection 30. A debenture includes a debenture stock, bond, or any other instrument of a company evidencing a debt, whether constituting a charge on the assets of the company or not. All of us are aware that bond is nothing but kind of a debt. Okay, a fund which needs to be repaid to the investors who have brought in money, unlike equity, which is a perpetual capital. Here, money has to be repaid, and it could be secured or unsecured. That means whether there is a charge on the assets of the company or not, it could be a blanket without any security also, unsecured, or it could be secured one also. This is a simple definition, very plain definition of the Companies Act 2013. We have parallel one of NCS regulations also. NCS regulations is the one which is guiding the non-convertible securities issuance within SEBI. Okay, so like that, this is something like parallel to the ICDR, I can say. Here also it says that what is a debt security? Debt security means a non-convertible one with a fixed maturity period, which create or acknowledge indebtedness and includes debentures. There, debenture includes bond. Here, debt includes debentures. Bonds or any other security, whether constituting a charge on the assets of the property or properties or not, excludes security receipts, securitized debt instruments, money market instruments, etc. This is as per regulation 2K of the NCS regulations. This is one definition of debt or bond. First one we saw Companies Act, second is on NCS regulations. Go ahead. Again, there is an ICDR that also talks about bond. Convertible debt. It talks about bond or convertible security, borrowed security in two places. One is regulation 2J. Convertible debt instrument means an instrument which creates or acknowledges indebtedness, and the convertible equity shares of the issuer at a later date, or without the option of the holder of the instrument, whether constituting a charge on the assets of the company or not. K also talks about convertible security, means security which is convertible into or exchangeable with equity shares of the issuer at a later date, with or without the option of the holder of such security, and includes a convertible debt instrument and convertible preference shares. So these are the definition parts where we are talking about, what a bond is like, what the Companies Act is saying, what the ICDR is saying, what is NCS is saying. If you look at all the three definitions, there is some commonality. The one first and foremost feature of a debt or a bond or whatever we call it, there is a evidence. It is evidence of debt. This paper or this instrument or this particular security which is possessed by the investor, that what does it say? It evidences a debt. There is a borrowing by the company, there's a lending by the investor. Right? When it equity shares, we don't say it's borrowing, it's lending. It is investment by the equity shareholder. It's a perpetual capital, as I mentioned earlier. Here, this is a situation where this itself is an evidencing a debt, whether constituting a charge on the assets of the company or not. This is a standard principle. If you can kindly note in all the regulations, in all the definition part, these two things are getting emphasized. So these two, in my opinion, are the basic feature which distinguishes what kind of a security is this. So there should be an acknowledgement of indebtedness, and whether it may be there may be a charge in the assets of the company or not. So these two principles are to be borne in mind, whether to distinguish a particular security as a bond or a debt or whatever it is, vis-a-vis rest of the types of securities. Yeah. Next. Yeah, let's go next. How a bond looks like. In equity, if you see, those who are, all of us being company secretaries are a bit familiar with equity. Bond issuance and those who are familiar with bond will be little limited in terms of the population, because all companies do not come with a bond. But every company must have got an equity. This is a basic kind of capital one must be having. So to bring some kind of attention on the characteristics of bond, there is a face value or a par value. There is a coupon rate. It's an interest basically. The coupon, it means interest. Coupon dates, when all the interest needs to be paid. What's the maturity, redemption date? When am I going to get my money back? What's the issue price? What's the payout frequency? How frequently? And this is something different from the equity, that's credit rating. So credit rating is the one where, a SEBI registered rating agency, a credit rating agency, it rates a particular bond, a particular instrument or a debt instrument, and there are various rating scales, AAA, AA, AA plus, and so on up to DD is default. So after that, the various rating scales have been prescribed. And rating agency plays an important role over here. And apart from rating agency, there is also another one type of instrument called debenture trustee. Debenture trustee also plays an important role. Debenture trustee is none but an entity which is there to protect and safeguard the interest of the shareholder, the debenture holders or the bond holders of the company. So this is something like, a rating agency and debenture trustee are two types of intermediaries which are peculiar to this kind of a security vis-a-vis an equity. In equity, these are not necessary. Here, this is something necessary. There is another called yield to maturity. Yield to maturity means what is the amount of money I'm going to get at the time of my maturity, when I'm going to get the money proceeds back. Okay, how am I going to, how much money am I going to get? And yield, there is a calculation also. There are number of videos available in the market, how the yield is to be calculated. Yield is directly related to the price of the bond. When I pay more price for the bond, my yield is going to go down and vice versa. So if the bond is costlier, then what happens? The principal, the coupon remains the same, okay? But what happens? The amount of money that I'm going to invest to get the same amount of bond, that will be different, okay, depending upon the market situation. Sometimes it may be higher, sometimes it may be lower than the par value. So what happens? If it is higher, then I shell out more money, my yield is going to come down. If I spend less money to buy the bond, my yield is going to go up. So it's inversely, they are proportional to each other. There's a clean price, dirty price, something like, parallel to your ex-dividend, common dividend. It's just that. These are different types of bonds. G6, corporate bonds or NCDs. Today we are concentrating more on the corporate bond. Okay. Then there is a PSU bond. There are municipal bonds. Our next speaker, Mr. From Pune, he's talking about municipal bonds, if you're not wrong. There are some, but tenure, it's a short-term bond, there is a medium-term bond, long-term, and there are perpetual bonds also. By interest rate, fixed rate, floating rate, as I mentioned some time back, zero coupon bonds are also, then inflation-linked bonds. There are very many, synthetic products are there, which are linked to various benchmark, and bonds can be issued that way. Then security, we all know, there is a secured bond, there is an unsecured bond. What are special features? If you go with special features, some of them are convertible bonds, callable bonds, puttable bonds, green bonds. Green bonds is one of the ESG bonds. and NCS regulations, they talk about ESG bonds also. And there is a definition of green bond also under that. Yeah. Next. Just give an idea how the bond market today is, how we have traveled from 2024 on for the last 3 years, so till up to 26. So this is the amount of outstanding bond amount. Okay, so this is year-wise, every financial year-wise we are given. The data is there before you. And mostly we see here, there are two types of issues, like equity. There is a public issue, there is a private placement. Here also that happens. But mostly what happens in bond, the trend is a little different from equity. What happens here, the privately placed ones are larger in number when compared to the publicly issued debt securities. So take, for example, 24 and 25, number of, public issue is just 43 numbers. That means 43 ISINs have been issued. Here also, ISIN is one which is distinguishing the securities from each other. So there are 43 such issues, ISINs that have been issued in 24-25 financial year. And the amount raised was about 8,149 crore. Whereas for the same period, if you see, the number of issues under private placement, you can just make a guess of how many times it would be like 1,659 issues, and the amount raised was 9,86,735 crore. So these are listed ones. So whether it's publicly issued or privately issued, they all have got subsequently listed. So they come under our jurisdiction. 25-26, again, if you see, number remains the same as far as the public is concerned, but the amount raised is 11,343 crore. For private placement, it comes to 1,994 issues, and the amount raised is 8,19,736 crore. Same thing. Subsequent years, 25-26 also, it's the same thing. Again, coming to eligibility criteria, our non-connected securities regulation, NCS regulations are there, 2021. That's the one which is parallel to the ICDR, as I mentioned earlier. If somebody wants to float a bond, wants to raise a bond to the public issue, whatever, how he has to, what all the eligibility. And briefly touching upon eligibility, I'm not talking that much about eligibility over here. I have got other things to talk about. So it should not be that issuer, promoter, director, they should not have been debarred from the market. Then the issuer should not be a willful defaulter. Its promoters and directors also should not be fugitive economic offenders. And all pending fines, whatever is there, they should be paid by them. And there's a default history. No default interest and payment should be there for more than 6 months prior to filing. This is one of the conditions, brief conditions of what ought to be adhered to before somebody comes into the market for raising debt. This is some of the provisions of compliance. Once your bond is issued, once it's listed, you have got some continuous, compliance obligations. How in equity you do, there's an LODR. Same LODR is applicable to bond compliances also. Some of the chapters, like for example, chapter 3, it's something common for, equity as well as for debt. Regulations 5 to 14. Then again, chapter 4, if you say regulations 15 to 48, that is also applicable for debt also. Regulation 5, if you say it's pure debt, it is applicable for 49 to 62A of the regulations. And this is applicable purely for debt listed issues. And 5A is the one which is therefore high value debt listed entities, HVDLEs, we call it. So that's for 62B to 62Q. So these are provisions which are applicable to HVDLE. So what are the obligations? The obligations are, some of the obligations are picked up from the NCS, and most of the obligations arise from LODR. So if you see Regulation 6, 7, 8, 9, 12, 13 and all, they need not be explained by me. You all know that. And Regulation 6 says that compliance officer shall be a qualified company secretary. So that's more important for the group of audience which I'm addressing today. Just all of this, share transfer agent, cooperation with all the rating agencies, CRAs and RTAs, and how long you have to preserve the books and records. So all these things you're aware of, and about grievance redress also. So what is the timeline given to you for redressing grievances? Again, continuing with that, what are the other obligations that you have? Here, some of the obligations with respect to board intimation exchanges. So 2 buckets have been brought out over here. What are the intimations that you have to make to exchanges? You have to make intimation about the board meeting. Okay, the board meeting which is going to discuss your financial results, fundraising, any fundraising objects, or alteration to security terms, anything if you're going to, it's going to undergo any change. So this is warranted by Regulation 50. So such meetings, intimation of such board meeting is going to happen, shall be disclosed to the exchange at least 2 days, 2 working days in advance. Price sensitive information, again, we have parallel of Reg 30, Regulation 30, you all know that. Equity people are more aware of Regulation 30. Try to keep that Regulation 30 as a kind of mirror and try to understand the 51 in that context. It will be easier for you to understand what 51 is talking about, like default, rating revision, business disruptions. So rating revision defaults are something I can say peculiar to this kind of a security. Payment status. So you have to give a certificate exchange with a 1 working day of interest and principal becoming due. That's something. Then what all the upcoming payments, all the payments which are to be done for next quarter, that must be provided to the, before the start of the 5 days before the start of the quarter. So these are some of the things with respect to intimation to the exchanges. These obligations are contained under the LODR. Financial results, we have the same requirements as it of equity. You have quarterly submissions, unaudited or audited, depends upon the quarter to which the results belong. We have about time of 44 days from each quarter to make these disclosures. Annual submissions, we have 60 days. The same thing. Then there's a limited review. Unaudited results must be accompanied by limited review report. Whenever you go unaudited for the earlier quarter, there should be limited review report. I think this provision is common for equity also, if I'm not wrong. Audit qualifications are there. Then what kind of impact it will have on the profit and loss net worth? And this is important for all the stakeholders, and this is more important for the bondholders also. What are the specific timelines? Lines are specific line items are like debt equity ratios. These are key ratios which are peculiar to bonds. Okay, debt equity, debt to service coverage ratio, interest service coverage ratio. All the ratios we are all aware of what these ratios are. How do we need to calculate them all? All this. These ought to be disclosed in the financial results. There's an asset liability statement of asset liability, cash flow. This is something common across all the sectors, including equity and this one. Newspaper published results within 2 working days. Next. Again, some obligations for debts. This is coming under Regulation 54. What's the security cover? You have to maintain 100% cover. Okay, all the time you have to maintain that. So this security cover when you talk about, there is always a parallel obligation on the part of the debenture trustee to ensure that security cover is there. It is maintained properly. In case any deviations, bring it to attention of the debenture holder, take their instructions, etc., etc. Then disclosure of extent and nature of security created is mandatory in result. So what's the kind of security you created? Okay, that's something very important for you to disclose. Then half-yearly certificate is to be submitted. So whether there is a security cover 100%, though you may say, and this shall be independently verified by a chartered accountant or a statutory auditor. Credit rating, it's an annual review of each rating. Rating, there is something called rating surveillance, initial rating, that's the rating surveillance. These are obligations which have independently cast on the credit rating agencies, and these rating agencies have to do the rating review at least once a year. And whenever there are obligations, there are obligations that may arise. because of, various other reasons also, like, your disclosure which you talked about, the financial results you mentioned about, or other macroeconomic factors that may pitch in. All these things may warrant, the rating agencies look into this area. Like recently, the division we were discussing with some of the rating agencies to understand the impact on rating because of the current, this Iran-US war, so West Asia war. So we were discussing about that. So all these things warrant a rating relook, a rating revision, trying to understand whether there is need for you to adjust your ratings. So this is all a continuous one. So if I say 1 year, does not mean it's just, kind of a straight cut 1 year. So that needs to look into depending upon the situation that emerged during the course of the year. Then you have to submit certain documents, intimations to the debenture trustee under Regulation 56. So these were something which is peculiar only for the bonds, not for equity. So let us not get confused with the obligations that arise for the equities over here. So copy of the annual report, notices, resolutions, circulars. Okay. Then disclosure of material events. All these things need to be intimated to the debenture trustee. As I mentioned to you earlier, the debenture trustees are registered by SEBI again. That's another class of intermediary. And they have their own independent standalone obligations and responsibilities as per that particular regulation. So when you submit as an issue, when you submit these documents to them, and what they are supposed to do, how they have to, what are the duties that have been cast upon them, that are all contained in the separate regulations. And now there is one more policy change. Recently, we brought in that rating agencies have been given more, powers. They're empowered more. Now they can directly ask any information that they want, any document that they want from the issuers. Since you all are company secretary, many of you might be representing the issuer companies, So I'm telling you all that, the rating, the debenture trustees can, they have been empowered to directly get the information that they want. So they should not be, kept at the mercy of the issuer. So I asked for it, the issuer did not give, what can I do? I could not do my job properly. So this kind of excuse should be avoided. So they have recently been empowered last year to seek information about all that they want, whatever document that they want directly from the issuers. And as company secretaries of the issuers said, you have an obligation to share this with them. This is a statutory obligation on you. Protection of interest of shareholders, as you mentioned, annual report you have to send to everybody. Regulation 58. There is material modifications. Then then 3/4 of holders have to agree to the changes, right? There's a record date, intimation of exchange at least 7 days, working days in advance. Then what happens to unclaimed amount? Same way how you do in case of equity. Same way. Then there are transparency issues also. There are transparency comes from your disclosures also. Apart from that, there are other requirements like you have to have a functional website. Okay, you have to have business details, board composition, results. If I click on your website, I should be able to get all the information. The investor should not be, looking for this information, here and there. He has to get all the information in one place. Then it must be updated every day. Website should be there, contain all the information, and it should also be updated. So periodic updates is very, very important. All ratings, statement of deviations, and variations, all this stuff will be there. There is one section in this debt. There is a separate section called this high value debt listed entities. These are all looked at on par with equity because the amount of money that's outstanding is so huge. So they cannot be simply kept aside saying that this is just a debt. Okay, though there is a contractual obligation, you have to do all this stuff is fine. But there is always, there should be an extra eye on the kind of issuer. The issuance is based on the amount of a value of investment, that's outstanding today. So the entities with outstanding of NCDs of 5,000 crore, this is recently amended. It was 1,000 crore, it was 500 initially. 500 was increased to 1,000. 1,000 was again increased to 5,000 today. This is basically done to make, your life easier. Okay, because these kind of, securities, they call for some enhanced compliance requirements. As mentioned to you sometime back, Chapter 5A is specifically for HVDLE only. When I when I talk about Regulation 23, for example, of RPTs of equity, we have parallel here 62K. So that's a parallel of that over here. So what is happening? The requirement for a HVDL is a higher, stiffer, and stronger. So we are in a mood, a kind of a climate to increase the bond participation, bond market, elaboration and things like that. I'll be touching upon that also in a short while from now on. Then quickly I'll just go on to next slide. So these are some of the this thing. Provisions pertaining to other aspects of your compliance. Regulation 17 is respect to the composition of board of directors. Then how many maximum directors can be there? And then see 17, 18, 19 and all, 20 and all, 21, all these are common for equity and debt also. And 21, if you say, talks about HVDLE, if the top 1,000 listed entities and HVDLEs have necessarily come to comply with risk management committee. So all these are something common across equity and debt. So this is one common area. Next. So these are some of the provisions with respect to RPTs, as I mentioned, 23. For HVDLEs, it is 62K. You have to comply with that. Then 24 is about subsidiaries. What is the material subsidiary? In terms of the turnover or net worth, there's a definition. What should be material subsidiary? So then again, all the company's requirements for a subsidiary. Then you have to have one of your directors, main board company of the subsidiary also. One independent director should be there also. So all these are there over there. Then 24 is about secretarial audit. So I just want to share some of my experience with respect to Regulation 24 of secretarial audit. When I was in CFD, the department which looks into equity compliances of LODR. So that time I had set up one working group under the chairmanship of Mr. Narasimhan that was on this sectoral audit. Sectoral audit, basically Section 204 of the Companies Act 2013, that talks of our sectoral audit report, and you file a report on MR3. So a parallel provision is there contained in way of a circular in SEBI's regime also. And SEBI said sectoral audit is compulsory for registered companies. So what we did was that was too general for us. So we wanted to have some kind of a granular prescription. So a company was working for setup. So many of the company secretaries, both the employment and the practice, exchanges, were all part of the group. And one important thing that came, it was a master stroke amendment that was brought in by SEBI based on the recommendation. This particular group is that secretary shall be appointed by the company in general meeting. Always we find secretary, chartered accountants are to be appointed by company in a general meeting, and they also cannot be removed. Just with the advisor consent or intervention of the board. Has to go to the general body meeting. A parallel provision has been brought in, by which we say that yes, now secretary auditor also does an important job, and he needs to be appointed by the company in general meeting, not just by the board of directors, because appointing, removing the board by the board of directors is an easy way. So we thought it's not, no, this should not be allowed. So we escalated the approval power authority to the shareholders. So today, when a secretary is appointed, either a practicing company secretary, individual or a firm or whatever it is, then the approval of the shareholders is required. And then, of course, the timeline of 5 years is there, something parallel to chartered accountants, cooling out period, all the stuff will be there. Then we talk about Regulation 25, when we talk about independent directors or what are the obligations of independent directors. One of the things we have always been, insisting on is independent directors should be given some skill set development program they have to undergo. And recently also our chairman said that, these independent directors to be, well-versed or to have good amount of domain knowledge. Okay, because the background of the person may not be gelling with the core operation of the company, and it is incumbent of the company, and the company secretary, we all play an important role over here. So you have to educate, train them up give them a kind of knowledge on your core areas, because different sector, different industries are there. So what happens, independent directors may not be equipped in all sectors and all industries. So we have to give a kind of a skill set development. That's more important. This is a requirement regulation 22 also talks about. There are some obligations that are cast on independent directors, and there are some installation classes also there. If you see section 149.12, that now the installations, I'm companies at 2013 I'm talking about. So that has got some installation classes also. So the independent director cannot be held responsible for whatever that happens in the company, and he has to be responsible for whatever that is authorizing or whatever that comes to the board process. So this is the installation that is there in 114 and 12. And LOD is also having a parallel provisions, which is that I can't just pick up somebody to say that you're not done something. So I should always say how I am not related to the situation in question. That's something. Again, 26A, 26A, and also how within how many times you have to, within how much time you have to fill the cash flow vacancies in the cases of KMPs also. That's something. Yeah. Next. Some couple of recent policy changes. One of the policies which I mentioned to you earlier is about next. The threshold of HVDID, it used to be 1,000 crore. Now this has been increased to 5,000 crore. Then, as I also mentioned to you sometime back, the deputy trustees, they have been now they have got the power to call for information from you. And regulation 15 is one. Now I'm just sharing the thing with you. Regulation 15 I'm sharing with you. प्रेजेंटेशन बार-बार के दिखेगा ना ठीक है. This is the kind of provision that has been introduced now, regulation 15A. A trustee may inspect the books and records. He may register the registers of the issuer and trust property. It may make out for information, documents, etc. So okay, so this is something very important for you from the point of view of compliance officers. So your cooperation with them is really important now, because this is a statutory obligation on you. Yeah, next जो है दूसरा जो है ना ये जरा देखा ये. And some standard timelines are also been given here. There's a circular of November 25, 2025. There's a typo here. It's 2025, not 2022, 25. Let's share that. November 25, 2025 circular that talks about the various timelines for submission information to the debenture trustees. Right, yeah? So this is a kind of submissions that we talk about. So security covered certificate we spoke about. This is very important. Statement of value of pledged securities, debt service reserve account. Okay, statement of the value of the debt service reserve account, net worth certificate of the guarantor in case if there is a personal guarantee. Then there is a financial value of guarantor prepared on the basis of audited financial statements, etc. Valuation report and title search report. So this was something every year you have to give, and there is a timeline given for some of them are quarterly, some of them are half yearly, some of them are annual, and valuation report and title search is once in 3 year obligation on you. So this is what has been mentioned in the new circular that's been issued last year. Yeah. Next. Next. Yeah. So what's happening today is that, as mentioned to you, initial data which is submitted to you, that says that bonds, corporate bonds need greater amount of penetration and larger participation, both by issuers and also by investors. Today the scenario is something like this. As I mentioned to you earlier, The privately placed ones are, the listed space, if you talk about, the privately placed ones are larger in number when compared to publicly issued ones. Second thing is that the unlisted number of securities is larger in number than the listed ones at all. So there is a data on that. I shall come to that also. So then, yeah. So what happens? So there is a need for us to, bring this particular type of instrument to the attention of the market. Okay, so to this extent, what we did was this year, February 4th, we did a bond outreach program. Then we came up with the tagline for the corporate bond as an instrument, bonds ek sashakt bandhan karke. We brought it out actually. So this is something, an initial stage of, bringing more awareness among issuers. Look, there is an opportunity for you to come to the bond market also, instead of depending upon traditional, banking and NBFC finance routes. This another route is also available for you here. So this is something which we have started actually, and the initial video which I was showing to you, that was actually released by Chairman SEBI at his hands on 4th of February during this particular inaugural meet. That's bond outreach program meet. Yeah. This is just data on how much is the listed bond share, okay, in corporate funding. So you can just see the number where other nations are and where we are. So there is a good scope for us to increase this number. We are still in single digit actually. Okay, next. This is another overview of how many bonds are there, how many of them are private listed, how many are unlisted ones. If you see the unlisted ones, this particular data, it says about 15,000 are unlisted ones of the total of 20,000. So if you see, so it's about some 15,000, nearly 70%. You can say 3/4 of them are unlisted. So these public issues again is very marginal. We need to increase them. We have to bring more people to our side. And next is again a slide on the distribution. How many are and how many, if you say region wise, how much has been issued by each of the region. So there is good scope for some of the regions, especially the south and all. If you see, there's good scope for us to increase the number of issues. And basically towards this aspect, what we are planning to do is that we are going to have a pan-India outreach program. We are going to have pan-India outreach program whereby we are going to meet issuers, issuer companies, promoters, CFOs, and you, the company secretaries also. We are trying to understand through you what is it that is prohibiting you from coming to this market. Why do not you come to this market? And we are trying to understand your concerns. This will be kind of field level first time study based and exchanges are joining hands with us, and we are going to go to meet all these issues, prospective listed issues, and we're also going to have parallel some awareness programs also for investors. So here in this context, I may be requesting the help of the ICSI, Company Secretaries Institute, to extend a helping hand to us in terms of networking, in terms of arranging for the meetings, in terms of facilitating meeting with promoters, CFOs, and secretaries. Secretaries can pretty much help us. And we come to your places, your regions, districts, wherever you may be. We'll come to your places. We'll try to understand, through you, and whatever the handholding you want, whatever help that you want, in terms of either raising the debt security, or in case if any concerns. Look, today I'm not coming to your market because of these reasons. I would be really interested in knowing what the concerns are really like. It could be on compliance, it could be on something else, I do not know. So we are just going to make it beginning, and we'll be touching upon you all. So I'm just telling you in advance, no, I'll be a guest at your places, and me and my team will be coming to you all. So we'll be meeting you all to understand, your mindset and views also. So our idea is that to bring more people, more issues into this segment, so that this segment gets, kind of elaboration, and this segment is in turn directly or indirectly dependent by many other types of intermediaries also. For example, if you have mutual funds, AIFs, etc., they also invest in these products. So this is something like, it's not just between the issuer and the investor. There are larger other segments also which are involved over here. So this is kind of a cyclical relationship that's there actually. So we need to meet you all. We need to understand, and we have to take the this market here next level. Next time when I probably meet you, say after a year or so, I should be able to talk to you with with a kind of a jubilant mood, saying that look, we have had this kind of a situation last time. Now we have really increased, or we have improved to this extent. So I would be really need the help of ICSI. So this request I'm making in the presence of all my co-professionals of the Institute of Company Secretaries of India. Last one, we have a couple of concerns on the when we do inspection of various intermediaries, as I mentioned to you, rating agencies, or dementia trustees. These people we inspect them, and during inspections we get to see where the non-compliances are, and otherwise also during our normal supervisory meets also we get to understand where the problems, why somebody is not compliant. For example, if you ask a DT or CRA, securities covenant management, those who are familiar with debt issuance and servicing thereof would be knowing what SCM is all about. So there we try to understand why there are some gaps in terms of data, and they have some reasons to say, and the reasons are pointed at the issuers actually. So my colleague Mrs. Sarika would like to say a few words on this. Sarika, please.
So good afternoon, everyone. So what is SCM is nothing but a security and covenant monitoring system. It's a terminology used to identify the system identified as a for capturing the details of the assets being secured against the bonds issuances. So this in the past since 2021, this matter of defaults, major defaults were happening. There were various lapses. There were a lot of complications being dealt by the DTs as to how to go about dealing with these defaults. So there was a working group formed wherein stock exchanges was involved, depositories was involved, CRA, debenture trustees, and debenture trustees are very important intermediary as far as safeguarding the interest of the investors are concerned, debenture holders are concerned. So what happened was, when this system was developed in 2021, from the time there were different phases of implementation. It had phases first to cover the asset details, then it had the phase of entering the covenant details, monitoring this, monitoring the security coverage ratio. So all these activities cannot be implemented at one go. So also there was a decision that the security and covenant monitoring system will be implemented in phases. So when we talk about phase 1 or phase 2, we have now actually successfully implemented this system in NSDL and CDSL both, and the depositories are the core responsible market institution who are responsible for maintaining this entire system, and issuers are the end users. They are the first step user of this system, because issuers, whenever they come up with the bond issuance, it is specifically for the bond issuances, the issuers have to enter the details into the system, and the details are so minute that you have to enter the ISIN, you have to enter the size, you have to enter all the respective minimum details that you deal with it at the time of offer documents. So that's the kind of depth involved in entering these systems. The concern, if I have to share here, is the issuers generally, when they fill this system, there are n number of fields which are not being mandatory. They are being left blank, and because all issuers are in a hurry to complete their offer document related procedures and come out with the issue as fast as possible. But that what it leads to is, it leads to number of fields being left blank, and to the end of the debenture trustees who are ended up with verifying all the details that issuers enter into the system. So DTs actually does the verification part of it. Now what is happening is, because issuers are not entering the details in this system appropriately, there are a lot of concerns that DTs face and a lot of concerns that CRAs face because issuers not giving those details on time and also not giving in many cases. So this is the concern we are dealing currently. We hope that we get into the depth of it and get it resolved as soon as possible. So these are the main thing we wanted to highlight, since you are all company secretary. If you all know, you are the people who actually enter the details, and we would be happy if you see to it as to what exactly is required even at the DT level, even at the CR level, and those fields are mandatorily being filled up. Yeah.
Thank you, Sarika. So that's a kind of a first line of first level information input from Sarika. She's been handling this subject for quite some time, and I think I have exceeded the time given to me significantly. I should have stopped my address by 3:25 p.m. We are already 4 o'clock now. So in the interest of time, I'm pausing at this level. And in case if any questions are there, I may please be raised with the questions. Yeah, very few number of questions. Yeah.
Thank you very much, sir. Thank you, sir, and whole team. Before we conclude your session, I have a few questions from my side, sir. My first question is, sir, what are the primary products and services that an online board platform provider is permitted to offer to investors, sir?
It's a good question. In fact, good that you raised this point, because I wanted to mention about OBPs. So online bond platform providers are basically what happens. These are all tech companies. They have their own websites, and they have their own system in place, whereby they sell securities to the investors. So this is a kind of a place, you can say something like a broker's place where I go buy and sell securities. This is one thing which has been facilitated electronically. Basically, he is a debt broker. He is a broker who should register with exchange, BAC, NSE, wherever it may be, as a debt broker. And there are some net worth requirements, etc. And he has to comply with that. And what all can be done by a OBP? OBPs can deal in all securities which are dealt with by SEBI. Okay, there's no restriction into what security can be, what cannot be, because in our master circular on OBP, if you can refer to, that says that whatever the sector regulator, out of the regulators are dealing with, all those products can be dealt with by OBPs. For administrative purposes, what we tell, not just OBPs, even other types of intermediaries also is that when you deal with products of other regulators, for example, fixed deposits. OBP is also dealing fixed deposits, but fixed deposits do not come under SEBI's purview. So that comes under the purview of some other regulator. So what happens as a consequence, I won't be able to monitor those securities in terms of compliance or otherwise. Tomorrow there may be investor compliance cropping up. So SEBI may not be able to deal with those things, and this is a kind of a principle-based segregation that we have made, but we're not restricting them. In fact, our circular says that you can do. If something comes under RBI purview, also you can do. IRDA purview, also you can do that. Nothing is being stopped over here, and they can deal with all kind of listed debt securities, G6, sovereign gold bonds, the municipal debt securities. In fact, this is one platform, which we enabled. We made it with known to the public. We are making it known to the public. Is that retail investors can access them, retailers can make investments, through these platforms. To facilitate that, these platforms have been recognized, and in our opinion, OBPs play a crucial role. And today's scenario of the bond market, which I highlighted to you, and with the expectations of increasing the bond market penetration, and the OBPs, the services is something, it cannot be just measured in terms of words. This is what OBPs actually do.
Just one small thing I would like to add. In chapter 21 of NC's master circular clearly specifies what all can be offered by OBPs. And in case if they offer the products regulated by other regulators, then they have to offer it in another different tab in their same website. So that is one small thing SEBI has mandated.
Yeah.
Okay, thank you for clarifying. Sir, next question is how green debt security is different from ESG debtor security, including bonds?
ESG is, it's a if somebody who is very good in mathematics, ESG is got a superset, green debt is a subset. Okay, so in a ESG environment, social and governance, many types of securities are issued. And green debt securities are one of the variants of the ESG ones. Basically, these are for green projects, energy, transportation, water management. That's the reason, then solar power. So we have some variants also. Then regulation 2.1Q of NC's regulations, if I'm not wrong, and that talks about what these products really mean. And you have, if you look at the definition part of it, you can see that there are some green bonds, there are yellow bonds, there are blue bonds, So bonds are very, very colorful. They have been colorfully defined over there, and there are other variants also of bonds. So this definition we have to go through, and if just give a perspective of this, how much is the number today? There are about some 29, right? 29 green bonds have been issued till now, and when the first issues had started somewhere in 2023. And this data is there in public domain of SEBI's website. If you go to SEBI's website, there is a tab called statistics. In statistics, you'll find all these things, not only for green debt and also for other, instruments. This has been promptly updated by us. And we are raised roughly about some 8,600 crores of till now. That's the kind of a size of this market as on date, the money that has been raised. And so 29 issues raise this money now. There are others also, sustainability linked bonds, they're also there. All these come under the larger bucket of ESG only. So green bond is a subset of ESG bond.
Thank you, sir. Last question is, what key warning should you look for in bond advertisement, sir?
See, bond advertisement, these OBPs are the ones who largely commit bond advertisements. So, bond, when you look at, you have to be very careful about the kind of risk that is involved. Every capital market instrument has a risk. Okay, and bond has got certain other peculiar risks like credit risk, default risk, etc. And this disclaimer is there in all our, we are advising all the intermediaries, especially the OBPs, to carry out a piece on disclaimer with respect to the risk as such. So apart from the offer document to read properly, carefully, this is something peculiar to bond alone, because you have different types of risk also, as I mentioned. It could be municipal bond, it could be any other corporate bond, and I think the risk remains the same. And we are advising people to be careful with respect to the kind of risk over there, and don't get tempted, by whatever the language that the people use. Just try to understand what the instrument is all about, and what they're saying could be true or not, and what the disclaimers and the risk factors are talking about. These investors should be really careful about, and intermediaries and issuers should be really responsible in terms of what they are advertising about.
Thank you very much, sir, and the whole team. Thank you, Sarvanas sir, for such an insightful and comprehensive address. Your view as a regulator has truly given us a deeper understanding of the regulatory framework governing corporate bonds. We are extremely grateful for your time and wisdom, sir. Definitely, sir, ICSI is with you for promoting this concept. Thank you. Thank you all. And now I would like to invite Dr. C.S. Kunal to address the participant and share his professional experiences with us. Sir, the floor is yours.
Yes, thank you, sir. Thank you, SEBI team as a regulator to set a tone in a very brief, as a regulator. So thank you again for setting the tone and make my work easy. So screen is visible?
Yes,
Not yet.
yes. PPT note. PPT note.
हो जाएगी शेयरिंग बंद कर दिया मैंने
Okay, thank you so much. Thank you.
Thank you, sir. Yes, sir. Now screen is visible.
Yeah. So considering the municipal bond, actually, I just skip it as sir already covered, so we can start directly to the municipal bond, right? Yes. So municipal bond, if you consider in 2015, SEBI issues a guideline for issuance of debt securities for the municipalities actually. So in 2015, we try in 2017 being the first municipal corporation to issue a bond. So firstly, if you see the relevance of the municipal bond, considering the constitutional functions, this is the third tier as far as constitution is concerned. So very specific about the municipal bond. It's not a body corporate. It's not a company. They don't have a board of directors. They don't have shareholders. They don't have AGM. So this is a peculiarity of the municipal bond, and the scope is very huge. As also referred, considering the corporate and municipal also, it's 8% vis-a-vis US $4 trillion. So the scope is much greater in sense to expand the bond market and more specifically a municipal bond. So I just share my experience why we go for bond. So the project which we are going for the bond is 24/7 water supply, equitable water supply. So the total project cost is 3364 CR, 3,364, out of which we structured as a debt is 2264, almost 2/3 of the loan portion. Out of that, we started with the 200 as a stretch. So the reason being, when we go to bankers, bankers have their own requirements, right? Considering HUDCO as PSUs, they also have their conditions that we need to have a Government of Maharashtra as Urban Development Department, Government of Maharashtra as a nodal department to govern the urban local bodies in Maharashtra. So they put a two condition, out of which one shall be complied with. So number one refers to state guarantee or comfort letter from Government of Maharashtra Urban Development, or a charge on the asset. So if you consider urban local body, it's a public asset. So option 2, to create a charge on the asset, it's not possible at any point. Then option 1, which is required by HUDCO, is state backing for the instrument or loan repayment. So again, that is not possible. So we started thinking, we start preparing for raising the bonds. This is the background. So just we start with the presentation. It's a revenue bond. Revenue bond refers to the bond raised for the project which have a revenue received to the issuer as an urban local body. Say for example, urban local body shall perform function which is specified by the Constitution 243 and Schedule 12(8) something. So some mandatory functions are assigned to the urban local bodies, out of which, say for example, we have a function of distribution of water, availability of parking spaces, like that. So these projects are project revenue specific. So in case of revenue bond, you need to identify the project. This is the first criteria, and that is very much important in case of municipal bond. So we identified water supply as a project. Considering 2017, that is old limit. Now we have added 32 villages, but in 2017-18, we have a old limit for PMC. So what we're trying to mark as a project equitable water supply, and for that project, all DPRs, work orders, are already in place. So considering that, and we have a revenue model, we got approval from our standing body and general body, that is apex body of the corporation, to enhance a percentage of property tax in the water portion. So that is again a revenue source of it to compensate a debt servicing, right? So general obligation bonds, it refers to the general infrastructure for the urban areas. Say for example, maybe tunnel, bridges, flyovers, or any beautification like that. So this is general obligation bonds. So this is what the SEBI says, Municipal Debt Securities Regulation 2015. Eligibility, issue mechanism, and continuous compliance. So we gather in 3 layers. What is eligibility? 3 years revenue surplus, 0 default record, state recommendation. As far as Maharashtra is concerned, so we need to get approval under Section 101 of the Maharashtra Municipal Corporation Act. So each state have their own statute. Some state may issue a comfort letter considering the their policy decision. So in Maharashtra, as far as Maharashtra is concerned, they are not issuing a comfort letter, they are only issuing the NOCs. So statutory borrowing cap, that we need to get the approval from standing committee, that is finance committee considering, and general body, that is apex body for the policy decision. So once that 2 approvals are ready, then we're supposed to go to the state. In our case, Government of Maharashtra. We send a proposal, we make deliberation, we make presentation to the concerned authority, specifically Ministry of Finance, Government of Maharashtra, and Urban Development. So they both are jointly, considering the proposal, issue a NOC, considering that the debt is to be, paid by the issuer. As such, state do not have any obligation on it. So in that fashion, they issue a no objection or approval for the loan. So in our case, we issue a private placement 1780 by using a BSE platform, online bidding platform. So I think at that time, the bidding platform only available for 500 CR plus, issues. But considering as a public body, we requested BSE at that time in 1718 that kindly allows us, online bidding platform. So there is a transparency, in the whole process. So that is what we started with. Mandatory ratings, we have a 2 rating. So preferably before issuance of the rating, we already have a 1. So before, just issue before, we have another also. So we have a 2 dual rating. Trustee and lead manager. So it's a merchant banker, right? Escrow and DESRA. DESRA is a 2, what we can say. We have a semi-annual interest payment. So a 2 installment of the interest, that is we kept as a DESRA. And escrow mechanism, we deliberately in the next slide we in detail with what is the escrow. So quarterly fund utilization, I think sir already covered periodic disclosures, end use restriction. So that is again linked to green, blue, and municipal bond also. So end use restrictions. So it's a project specific fund that utilized for the project only, and quarterly utilization certificate has to sign by the auditor or statutory auditor. So it's all about how the bond is. We have a 7.59. Why I'm specifying 7.59? It because when we approach HUDCO, that is 10. After discussion, that came down to 940, 950, something like that. So again, a huge difference with the bank loan or HUDCO loan and compared to the coupon rate for the bonds. So we structure in a very nicely manner with the escrow mechanism. Eligibility criteria, revenue surplus, zero default, state recommendation. Of course, the section may vary, but almost all over India, state recommendation is required, and they have their statute and provisions. Accordingly, they can issue a NOC. Investment grade, of course, rating is there. So, sir is also talking about the rating. Now, if you see the 16 Finance Commission, Government of India, there's mandate. If you want to eligible as a municipal council or urban local bodies, you should have rated. So rating rational and rating grade is not important, but first having a rating is important. So that is mandatory for 16 Finance Commission as far as all government and urban local bodies are concerned. Project readiness, we have of course, DPR is ready. At that time, DPR was ready, work order. We just wait for the work order. Once we have a fund with us, we can start with the work orders and work is on field. Escrow revenue segregation, double entry accounting system, statutory borrowing limit that is specified by the standing committee and general body. This is how the process flow: standing approval, general body approval, state government NOC, engagement with the rating agency, appointment of debenture trustee. So in our case, we go with simultaneous activities. So we firstly go with the standing committee and general body for the appointment of merchant banker and other entities, and then accordingly, once we have approvals, we have in place. I mean, we have a draft IM in place, we have a work order, we have a project, all necessary checklists are ready before we go to the listing and accept the fund. That is prima facie is important, because otherwise if you see step by step, that takes time, and also the delay of the project maybe. So in our case, in 1780, we already submitted to the BSE, but now afterwards we need to submit SEBI. So SEBI is supposed to wait and communicate his remark, then again revise if any we need to submit. So that is again a changes after ours. Open subscription, yes. Allotment within 6 days. Formal listing, we have I think second day we received a fund on 20 June and listing ceremony on 22nd. So that's 2 days. Quarterly audit certificate, half yearly, that is same like a regular bond. So what the escrow is? So for any investor, those who want to subscribe a bond, so any investor want to save his investment or returns, right? So considering that, we draw down an escrow mechanism and we escrow the property tax. Property tax includes a water tax, for the individual, household in water supply fees is included in the, property tax. So we have a tripartite agreement, bank, trustee and PMC, right? So once we got a, collection on the first working day, all banks which are collecting the property tax shall need to transfer to the escrow. That is, that goes to the bank having again 3 buckets. DESRA, that is one time only. Then, bond and sinking fund. We have a bond and sinking fund. Once bond and sinking fund buckets are full, then go to the surplus, and surplus is used for the, for routine purpose. So the escrow, the mark escrow is property tax for our municipal bond. So considering that there is no shortfall because already register is there to interest payment amount and monthly, bucket is full. So there is no default at any point till the maturity of the instrument. That is the beauty of the escrow mechanism. If anything shortfall, that again first adjust it from DESRA and then again DESRA to escrow. So that is not required, but still that is the mechanism. This is disclosure. I think sir already covered that disclosure. There is no any specific disclosure as far as municipal corporation is concerned. So yes, material event. Recently, I think in a month of April, in the month of April, we got some, the media says that, PMC has not utilized 200 CR and, diverted amount and all. So I think we got that email from a US consultant who's infrastructure consultant on 13th. And the same day we report to the, respective stock exchange that the media, media news is not a relevant one as far as PMC is concerned. So that is the latest event, material event. Within 24 hours, we report to the designated stock exchange. So rating changes, if more specifically, if the ratings are, degraded, so that is the immediate call. So routine, we as a best practice, we can, communicate all rating, even though the ratings are the same. Preferably, we have a dual rating, so June and December. So we report both. Record date, of course, 7 days clear, 7 days. Utilization certificate, unaudited financial year, half yearly. The half yearly financial statement we submitted to the Honorable Standing Committee, and the same with the designated stock exchange. So this is yes. Second. This is LODR for municipal bonds. So this is just comparison for last 7 to 8 years. How which are the municipal corporations raise, what are the rate, what is the project, and what is the rating. The intention to compare that, if you see the year and the coupon rate. So in 2017, almost the loan is going 8.5 and above, 8.5 and above. So there's only comparison if you see the bonds and all. So 18, 19, 20, 21, 24. So the coupon rate is 8 plus. I mean 850 plus if you see the all. So what we as a PMC, to get the less rate or competitive rate, we have a disclosure, we have a strong financials, we have a good audited balance sheet. So that is the the positive point to get a minimum coupon rate for us. So within 2 hours, we got a subscription for 1,200 CR, that is 6 times of the issue amount. So NAM 2 is recently, going on, but we are in phase of NAM 1 implementation. So double entry accounting system is mandatory. Standard chart of accounts as per the National Municipal Account Manual, which is applicable to the all municipal corporation. Revenue surplus, fixed asset accounting. Now the 16 Finance Commission is already, started. So they have also mandate, real-time double entry accounting system. And recently, 2 days before, we got the sanction from central government under the Urban Challenge Fund. So this is what the urban local bodies are, expanding their infrastructure works. So challenges and way forward. So if you see the municipal bonds, very few of corporations. So considering 18 to 20 corporations are, raise the municipal bond. Considering the all over India, the urban local governance is 4,400 plus. So very few corporations are going, way forward. So investor don't have, that instrument as an investable instrument, right? So that is the issue. If you see the way forward, Amrut 2, Government of India, Government of Maharashtra, it says you have to, credit rating so that you can go ahead with the, bankable projects. Audit rating gaps. So most of the ULBs are now going on double entry or real-time double entry accounting system. So that is the auditing and accounting is the gap, to way forward for the raising of the bonds. So considering the third tier, mostly all urban local bodies earlier depends on the grant dependency, right? So we are from grant to, outside finance. So that is what we are looking for. So BSC platform in case of way forward, as a competitive bidding for the loans for the bidders or for the investors. 16 Finance Commission emphasizing, rating and bankable projects for the urban local bodies. Partial credit guarantee, HUDCO and Government of India is also pushing for the, comfort level. Limited investor appetite. So if you see this present budget, Honorable Finance Minister announce if urban local bodies issue 1,000 crore issuance, then directly 100 CR as an incentive to be provided for that particular urban local bodies. But if you considering the overall pictures of the urban local bodies in India, so no one, no urban local body is having that much capacity to absorb 1,000 crore as a one-time amount. So considering other cities in Maharashtra and other state also, pool financing is also going on. So in 17-18, we suggested some parameters to the SEBI, to the merchant bankers and trustee. So in that suggestions, we also asked for pool financing, and I think that is very much now on record. So small corporations can plan for the pool finance and share the incentive. Investor grievances mechanism. So SEBI score, I think now 2.0 is also in place. Now earlier the SEBI score original one was there. So now SEBI is enhance already the portal. Then its score 2.0 is in place itself. So what is referred to the score? It's a more or less with the investor backend. So quarterly grievances, if any, that monitor the grievances. Each urban local body has to file quarterly, investor grievances, if any, what is the position, what is outstanding, so like that. So within 21 days. Phase out manner for, grievances, common complaint. Normally in municipal bonds case, only two options, two category of complaint, maybe non-communication or non-received the, update data, number one. Number two, non-receipt of the, interest amount on the bond. That is peculiarly with the municipal bond. So we are now considering the green bond. Actually, it's started in 2021-22. If you see the all parameters, the SEBI guidelines also, it says refers to what is the project for, is eligible for the green one. The certification is also important, The issuer is also reconfirmed that yes, a bond is green one, right? So it's a use of proceed. If you tagging as a green, that should be used for the particular project, and that project is supposed to be covered as a green, and that is certified one. So that is very much important part of it. Project evaluation and selection is a very much important part, and third party is SOP is required. Management of the proceed, that is dedicated dedicated fund for the projects, and reporting, of course, or continuous monitoring. Say, for example, in case of urban local bodies or municipal bonds, we have a normal rating, credit rating, right? In addition to that, if you are planning to a green bond, so you need to again have a third party opinion that, the issuer is complying with the, regulations, the requirements of the green one, the postage is utilized, the impact is measurable and all. So that is what all about. A green is a bond instrument which proceeds are exclusively for that project. Even though the municipal bond is also a bond specific or project specific, but still. Green bond framework, green securities eligible, of course, the project which, renewable energy, clean transport, sustainable waste, energy efficiency, green building, etc. So if you're considering our project as a, water supply, it's can be considered as a green one, but green one's tag was not earlier in 1780. So you can call our issue as also green one. So line taxonomy, disclosure requirement, of course, pre-issuance pack, external review, and post-issuance reporting on continuous basis by third party. Enforcement and recognition, international recognition, yes, for green, and actually probably the blue is also going on. I think Vadodara is also working on it for the blue one. Maharashtra last month, Maharashtra state established authority for the, regeneration of the river and all. So we are trying, tapping for the blue as a bond for through MPCB. So that is again a latest update on blue ones. Green vanishing penalty. So it's in next slide. It's what is the green vanishing is that. Trustee enforcement, as rightly says from SEBI, trustee has more power in the recent circular. So what are the projects? Renewable energy, green transportation, sustainable water. So that is what our project is fit into. So even though now the recent development in our new villages, we are trying to map as green or blue one for the coming issue with the corporations. So in case of green building, that is, certified by specific authorities. Climate adoptions, yes, the resilient city, heat resistance, environment resistant, sustainable water management as a, scarcity of water, biodiversity conservation and green buildings. So that are the, tagging of the green ones. So it's a green bond, just comparison. What are the amount is raised? What is the tenure? What is the yield? If you consider the normal bond or corporate bond and the green one, you specifically see that, 20 to 40 or 50 basis point is the, consideration as far as yield or interest rate is concerned. So if you see the yield or interest rate, it is 7.1, 7.6, 7.20, like that. So, that having benefits of the green tag. And even though Ministry of Finance is also emphasizing on bank, as a priority lending for the green projects. So framework, use of proceed, external review, yes. For green bond, we have a different parameters like that. So if the tagging is dark green, it's the safest one, right? So like that. So maybe triple B plus A, the A plus double A on sort of it. So on the same line, green one having dark green, light green, orange, something like that. Latest green bond issuance, of course, PSUs, some municipal corporations is also having that. Surat, Surat, Vadodara was also done it, the green bond. So global green market, it's a very much explore to the, having a issuance of the green. As you rightly see, the, big corporates like, Adani, Power Finance, so EDA, they are already raising bonds. So in India, the bond market really needs to grow up because considering the US and other international market, we are very, behind to tap that market. So this is, notable global major issuance. Greenwashing, that is what earlier I said. Greenwashing. What is greenwashing? So you're showing that the project is green, but it is not actually. So in that case, the penal provisions is also hit, and the SEBI is also, having a serious action on particular issuer along with the, compliance as an individual capacity. So that is a cautions note. If the project is not fit, so please don't, try to overemphasize as a green tag. If it is really green in on paper, in practice, on field, then only we can tag as a green one. So eco-friendly projects without specific environment merits or credentials, there is no point in to go for the green one. Proceed misallocation. If you use that proceed as a general project, it is not allowed. No impact reporting, as we need to, for green bond, we need to report the impact by the third party, and the report of the third party is a part and parcel of your, financial statement, annual audited financial statement. So it's a, onus on the management itself that yes, the project is green, the issue procedure is utilized for the green one. So SEBI enforcement and CS role as a due diligence, right? So we as being company secretary, we need to be, for namesake, green is not the relevance. Once, if you see the compliance part of it, quarterly compliance, that says what is, in MLD you save the waters, what is the carbon, emissions is reduced. So that parameters is very stringent. So only having a green doesn't, suffice the purpose. So recently, if you considering the government of India or India as a territory and the utilization of the, blue one, that is, maybe sustainable fisheries, marine conservation, coastal water waste, ocean plastic elimination. I think that is hit by government of Maharashtra recently, I think this month only. So government of Maharashtra is active on the, the plastic eradications and, recycling recently, last week. Sustainable desalination, mangroves, ocean renewable energy, coastal climate resilience. So that is again, good one to see in a project in the blue one. CRZ project is also marked as a, blue one. Even though the specific guideline like municipal bond, the guideline yet to frame, for blue one. But it is a tag actually, because if you see the Indore Municipal Corporation, they have a, solar panel projects. So we can call as a yellow one, but it is only tagging. It's a maybe after, year or so down the line, we can have a yellow bond also. So that is the tagging and utilization of the, proceed of the funds. See, there are few recommendation, in coordination across SEBI, RBI, MoHUA, Ministry of Environment, Ministry of Earth, on, blue, green, yellow bonds. So regulatory enables, yes, SEBI, MoHUA was there. Financial architecture, RBI, tax, DFIs, pilot is there. Institutionals, globals, yes, global trend fan, and capacity is there. So yes. The next section is company secretary as, bond one. Who is the safeguarding, or key contacts with the bond issuance. So functions, CS functions, corporate boards, municipal bond, green bond, yellow bond, blue bond, whatever the name called. Board approvals as per the company, as far as company is concerned, specific section 42. In case of municipal bond, standing committee and general body. Green bonds, green board, framework, certification of green one. Again, blue certification is required. So offer document prospectus, In case of private placement, you can issue a information memorandum for private placement. Corporate bond also, municipal bond also. Now the public issue is going, increasing. So we can have a private placement, we can have information memorandum, and in public, of course, it's a prospectus. Green bond framework, SOPs, yes, for blue bond also, SEBI compliance. Of course, NCS is there. As far as municipal bond is concerned, municipal bond regulation 2015, along with the LODR is there. Green bond, BRSR is there. Blue one, proposed guidelines is supposed to be formed. Periodic disclosure, of course, quarterly, half-yearly financials, quarterly utilizations, quarterly investor grievances, quarterly utilization of certificates, right? Communication with the debenture trustee, rating agency, all in all one. So considering just recently says trustee, in our case, we have a tripartite agreement itself says that without issuer consent, bank trustee can have a directly access to the our financials for bond specific or PMC as a whole. So that is what we already envisaged in 1780 itself. Emerging trend in municipal bonds or bond as compliance, SEBI LODR, market infrastructure, of course, T+1, T+0 is also their digital bond platform, DLT, as says, and I think General Manager Ma'am is also doing, specifying something on DLT, that is, digitized platform. So that is blockchain. So that, we need to entry, systematically entry in the login, that is maker checker concept. And again, the entries make in DLT, that is again approved by the trustee of that your particular bond. So that is DLT platform that is developed maybe 2 years, is phase wise going on. Financials, cash flows, now the rating is added in the DLT platform. More specifically, those having a secured instrument. So like we can form 8 for, maybe creation of charge at ROC. Accordingly, same is, to be noted in the DLT portal in case of if the securities or instrument or bond is a secured one. So, 2-tier monitoring is there. So ESG disclosure, yes. Sustainability disclosure, yes. Indian taxonomy is there. IBC, as far as municipal bond are concerned, all over India, I don't think IBC or any default is there, because mostly all the corporations having ESCO mechanism, and preferably all corporations are initially trying to property tax as a ESCO. So I don't think there is any default as such. So considering the emerging trend, now we can company secretary has called as the ESG or sustainability officer. So I think there is a trend. If you see the MNCs, they having people officer, sustainability officer, like that. So we need to really hard to work getting a emerging tag. Annual bond compliance, of course, it's cycle April, July, November, May, August, June, January, again June, October, March. Say for example, quarterly, within 45 days, we need to report quarterly, right? Half yearly financials, we need to again, within 2 months, we need to submit to the SEBI, to the stock exchange and rating agency and trustee also. So phase wise, all the noted here. Yeah, non-compliance penalties, of course, it's specified. So higher the penalty, that says you need not to be, compromised with your LODR compliance, more specifically. So non-filing of regulation, each regulation having, their process. Considering the municipal bond, as of now, the regulator is, silent on the penalizing the provision, because we need to enhance the number of municipal bonds. So as far as municipal bond is concerned, no specific attribute as a non-compliance penalty as of now. I mean, provision is there, but still there is nothing to it happen. SEBI regulation, references for SEBI, Elodia listing, yes, some changes, regulation 21, as also pointed out, trustee regulations, prohibition insider trading, credit rating, yes, credit rating, and debenture trustees. Some regulations are yes recently updated in 23, 24 also. So that is again, covered under the compliance. Companies Act, Municipal Corporation is the state statute, right? So insolvency for the corporate bodies, income tax, FEMA, in case of masala bond and all. So guidelines, circular, yes, the certification authorities are there. Climate bond is also one of certifying authority. SEBI master circular, score ID, MOA. So that is there. Ecosystem primary regulation. Yeah, I think it's a repeat one. So for bank, RBIs and all. So considering the all ULB is 18 only, so we need to enhance. I think sir is also specifying last 2 years, SEBI is taking the awareness campaign with the region wise, to enhance the numbers. I think that resulted, from few to single digit ULBs to 2-digit ULBs with the effort of regional offices of the SEBI. Yes, DLT, as far as DLT is concerned, I think there's an issue with the DLT is, we need to multiple working is involved in DLT. Say, for example, we are, submitting the quarterlies and half yearly with the stock exchanges. But again, we need to, again entry with the DLT platform, maker, checker and all. So that is, I think, make some hurdles with the urban local bodies as far as, human capital is available with that particular ULB. So that is the concern from urban local bodies as far as DLT is concerned. But it's a good platform as far as corporate is concerned. AI due diligence, yes. Electronic book mechanism, technology compliance, yes. XBRL, yes. Settlement is, the time frame is reduced from T+6, T+3 to T+0 or 1. Of course, security, SDD is also a part of compliance, which says that, your data is secured one for minimum 8 years. So there is no data, actions point is covered or captured during the particular quarter. That is what, cyber SDD is compliance is there. So this is all about, municipal bond. The next one is urban financing way forward. It's just, what we do as a municipal bond. So 9 years we are completing next month. So June 27 is the maturity of the instrument. So it's compulsory, compare with the global and India and all. So this is the processes what, 17, 18, 90, COVID, we have having a tough situation considering the urban local bodies function along with the compliance. So I think in 2022, SEBI issue a relaxation for, filing of the annual returns, annual audited statement and provide the relaxation for that. So that is also needed at that time. So 23, 24 now, NAM 2 is, on pilot basis. SEBI circulars, yes, and, active compliance. So this is how we, go about it for last 9 years. IBC, not very much relevant as far as municipal corporation is concerned. Equity market interference, banking system linkage, mutual fund debt schemes. I think very few company secretaries are involved in the compliance along with the finance. So what I per se say is that company secretary is also be a part, even though signing of the balance sheet is a part. I mean, there is a one part connected to signing with the balance sheet, but there is also, regular functioning, or having a, finance background is the need of time, for the company secretary. '17 we started with, then 18, 19, 22, 24. Now the grip is going on. I think, small corporations is also going on last year also. So that is the trend, 19 to 25. Actually, Government of India is trying to, a huge number of the ULBs, maybe 10,000 crore plus or 50,000 crore plus, funding, but still amount yet to, reach that level. It's already covered. Yes, this is, more specifically, I want to have a, discuss with the fellow company secretaries. See, if you see, specifically municipal bond, so it's a very gray area, to grow as a practice, as a consultation. Considering that before, trying to expand the scope, need to understand how the, urban local bodies functions. So if you try to understand, how the accounts are maintained, how the audit process is there, what are the mandatory functions, what are the projects, what are the, prospective projects. So that having, a professional input. So if you see the all over India till the issues, maybe say 18 or 20 urban local bodies. So I thought Ahmedabad having maybe finance team chartered accountant are there. We as a company secretary, Pune. Apart from that, if you see the overall India, uh, the CFO, the masters in commerce graduate and all, they are, leading the role of the municipal bond, but that is not actually really expected. So there is a huge scope for the, CS as a profession, as far as, drafting of concern, crediting, say for example, breach, uh, to provide service as a breach gap to the urban local bodies, between credit rating agencies and issuers. So that is again a huge scope all over India level. So that is again explore. So and if you consider the information memorandum, maybe for privately placed or publicly placed, so due diligence is mandatory as of now. So that is that is to be certified by the advocate fraternity. So with due respect with the all profession. So what my submission to the SEB is, company secretary can be a one of the certifying authority, as a due diligence, because we are doing corporate due diligence, right? But as far as municipal is concerned, really selected law firms are taking their cream to certify the due diligence. So I think that is the area we can look forward, and the president ICSI and team central team can push forward to the SEBI also. But before that, we need to understand the local governance, public finance and all. So if we can do that, I think we can be as a open area of practice or consultation in that regards. So company secretary in bond market, yes, we can have a centralized company secretary is a center point of contact with the all stakeholder, from standing committee, GB briefing to the standing chairman, considering till, signing of the documents, getting the amount, raise amount in our ULB's accounts, and of course, after receipt of the funds, compliance part of it. So company secretary is a person who can have a huge scope. So this is references. So considering the closing remark, municipal bond is the most celebrated democratic instrument in Indian finance. If you see, if you observe, Bombay Stock Exchange also started, muni bond as a script, as an instrument, right? Category. And as far as RBI is concerned, I think this is third or fourth year RBI report on urban finance. I think the importance of urban finance is increasing day by day. Now it's a instrument at a national level can be seen as urban finance as a instrument. So if you consider the budget size of some municipal corporation, that is equal to the state budget. So that is what I'm trying to. There is a very much scope for the urban finance or public finance for the company secretary as a profession, or maybe in consultation, retainership, or a bridge gap between the all stakeholder where company secretary is non onboarded as a full-time employee of the any corporation. So company secretary in practice can have also hand holding with the these activities. So recent example, last month I attended as an expert by CAG office last workshop last month. So, with due respect to the all profession, chartered accountant who has started in 2007-8 as a NAM, following up the NAM and preparing the balance sheet. So now they have the say that CAG is calling them to prepare the balance sheet of the urban local bodies. So if you considering the time frame, almost 7-8 and now 25. So around maybe 18 years timeline is, lapse to create an image of the chartered accountant to prepare a balance sheet of urban local bodies. So if we start, pushing SEBI, of course, through Central Council, the president. So we can have at least 5 years, 10 years down the line, we can have a say that yes, due diligence is mandatorily signed by the company secretary if you going for the municipal bond. That is what my closing remark is. So thank you all.
Thank you so much, sir, for this detailed deliberation and a special focus to the company secretaries with respect to the bond framework, which is a very new concept for our company secretaries. We have received 2-3 questions, so I would like to put up those.
Yeah.
So first question is, can bonds be issued for on-lending finance business by a private limited company?
Can you repeat again?
Can bonds be issued for on-lending finance business by a private limited company?
See, I'm not much with the entity as a private company because my focus is on municipal bond. But still, if you consider that, so that considering you can create and charge, right? You want to say like that?
So the question is this much only, so I am not that sure what the member is to say. But they are saying that can bond be issued for on-lending finance business?
Yeah, see, in case of private bond, so we need to, the escrow mechanism is not work, right? So, of course, you need to have a, asset underline. So, asset underline refers to, say, for example, bank is, if you consider as a normal transaction with the bank, if your bank is lending you the, say, for example, a car dealer lending some, credit limit or, OD to the particular business. So he just, lean mark the stock. The stock is moving, right? So same is the case, but that need to be checked with the, Companies Act angle. And of course, SEBI and stock exchanges guideline also. But prima facie that can be do.
Okay. Sir, last question is CERSAI involved in this bond market?
See, considering if you see two part of it, mostly all municipal corporations, the instrument is unsecured, number one. So it's listed unsecured taxable. That is what the taxonomy of the urban bond is there. So I don't think the secured bond as of now is there at present. But if the bond is secured, of course, because DLT platform is also provide the CERSAI compliance. So of course, in case of secured bond, of course, that is applied.
So, sir, we are now concluding this webinar, and I would like to place formal vote of thanks to you. On behalf of ICSI, I extend our heartfelt thanks to our esteemed speakers, Dr. C.S. Kunal Manwale, for addressing our members in today's webinar on corporate bonds. Sir, your valuable insights on the evolving regulatory landscape and recent developments in bond market and the emerging opportunities for the members have been immensely enriching and highly beneficial for our members. Thank you so much, sir, for taking up your time for this webinar. And thank you, members, for joining us in this 7th webinar.
More specifically, actually, last month, we met our, the president, ICSI last month. So we have some discussion. So president also requested that, you can have some words on municipal bonds. So I think I'm very much thankful, the president and ICSI team, central council team, to give me the opportunity to have a word with the, fellow members. Thank you.
Thank you so much, sir. Thank you.
Thank you.
Yes.